Welcome to this week's series of Credent Connect, and today we're going to cover a bit about the market, the economy thus far in November. It's been quite an exciting backdrop in the media cycle with the government shutdown, and we now know there is that temporary stopgap that is coming to end the government shutdown in the interim. As we assess that, kind of what that means for the markets, what that means for the economy, it'll be really important to get the entire backlog of economic data releases provided back into market participants' hands. It's critical to note that the economy operates on forward-looking assessments. The markets tend to look at those forward-looking assessments, and part of the volatility we've experienced here thus far in November could simply be a function of that growing or lagging uncertainty that is derived from that lack of economic data releases. On the volatility front, I think it is important to note that we have seen some much-needed volatility. Investors or clients often don't appreciate the notion of much needed in this context. But the reality is the markets rarely react the way the masses expect them to. And volatility is a very important and healthy part of a long secular growth cycle in the markets. I think for many, the valuation backdrop, the exuberance of those artificial intelligence, AI stocks that's been all over the news, that tends to generate this ability to want to chase, or rather this desire to want to chase momentum. So from our standpoint, that is by far the worst risk management decision we can make across portfolios. There is merit to participating in the artificial intelligence story, yet there's also significant merit to being diversified in a very appropriate way that minimizes those downside captures, those short-term periods of notable volatility that can often derail long-term success. From our standpoint, our job is to remain as disciplined and as guided as possible in that proven process that has achieved our third-party verified track record over the past 13 years. As we look ahead, we're excited to be releasing our view of 2026 over the coming weeks. We'll be assess what the markets, kind of our view of the markets rather, and the economy heading into 2026, as well as assessing portfolio adjustments and changes as we view the forthcoming economic developments that we foresee over the next 12 months. As always, it's critically important to note the things that you can and cannot control as an investor. Saving more than spending, controlling equity market participation, remaining vigilant and being in tune with your financial plan and your financial advisor. Those are all the best outcomes to long-term success, and we're here to be your advocate for that.